Hey traders, welcome to part 2 of my video series covering how to auto trade Forex through Oanda using Autoview and TradingView alerts. Today's lesson is going to be more of a theory lesson covering the commands and syntax that we have to work with when we are managing and executing trades through Oanda using Autoview. So this is a great lesson to take notes on. Get out a notepad or open up Notepad on your computer and just jot down some notes as we go through this material, because it will help you down the line when we get into the more practical examples of this information. So let's get started. All right, so let's go over the main Autoview commands for working with Oanda. So there are several commands we have to work with when it comes to Oanda. This is not a full list. There's a few more we'll go over on the next slide, but these are the main ones for managing your positions. So I've broken this up into 3 categories. We're going to have the command itself, what the command does, and a few examples of using that command with Autoview. So I'll break these down one by one. The first command is E equals. So equals sets this E parameter, and the E parameter corresponds to your broker or exchange. So if you were using this with crypto, you would reference an exchange like Binance or Bittrex or whatever exchanges Autoview works with. But for us, we are using Oanda, and so this will always be set to Oanda practice for demo trading, or Oanda without practice in it if you want to live trade. So whenever you set up your alerts, your alert will always need to start with the exchange you want to reference. Otherwise, Autoview won't know what to do with that command. And while we're here, it's important to mention that if you don't have any of these commands in your alert, then the alert will be completely ignored by Autoview. So just because you have Autoview installed on your computer, if it's your main computer you use for your live trading, if an alert triggers and you do not have any of these parameters set in the alert message, the text message of your alert box, then Autoview will ignore that command completely. So you can still use Autoview in conjunction with regular alerts if you are a manual trader. So keep that in mind. But if you are using Autoview and you want your commands to be executed, you must start every command with the exchange you want to trade on. The next command we have is S, and that sets the symbol or the market that we're trading. So in our case, through Oanda, that will be a market ticker code. Now keep in mind that TradingView does not put a slash in their ticker IDs, so ticker and ticker IDs in your scripts. So if you reference sim info, bear with me, I'm terrible at writing with a mouse, siminfo.ticker or ticker ID, then you need to add a slash in between the market that you're trading. So I'll show you how to do that when we get to the actual coding portion of these lessons. That won't be covered in this video. We're just going over the theory and the syntax of each command. But don't worry, it's really easy to fix your ticker ID to comply with Oanda's requirements. So the next command we have is B, which stands for book, and this sets the order direction. There are only 2 valid parameters here, and that is long or short. So if you want to go long, you would type B equals long. If you want to go short, you type B equals short. And I should have mentioned this earlier, but each command is separated by a space. So all you need to do is write this out, have a space, then your next command, then another space, and then your next command, etc. Anyway, moving on, we then have Q, which stands for quantity or position size. And this can be set to anything that you are able to trade based on your account balance and your leverage. So this is one of the main limitations of Autoview. Autoview does not know what your Oanda account balance is, or it does know what your account balance is, but it cannot calculate your position size based on your stop loss distance. So remember, if you're trading a market, let's say you go long on this candlestick pattern here, and your entry is at the close of that candlestick and your stop loss is 1 ATR below the swing low. If you're an experienced trader, then you know that you want to adjust your position size based on your stop loss. Not the other way around. You don't want to decide your stop loss based on how much money you are willing to lose. You want to base your stop loss based on price action or your rules-based strategy, and then you want to risk, let's say, 1% of your account. Autoview cannot determine what this distance is in terms of dollar risk. Now, obviously, this is a massive problem when it comes to automating trading strategies. But the good news is I've figured out a way to basically plug your account balance into your scripts, and then your script will calculate your position size based on your stop loss distance in pips, your account balance, and the risk percentage you want to risk. Now, it's not a perfect solution because you need to update your account balance regularly, especially if you're trading this on a lower time frame or any time frame that has a high trade frequency. So you need to reset all your alerts and change your account balance as your account balance fluctuates. But there are always pros and cons when it comes to things like this. The pro of Autoview is how simple and easy it is to use. The con is that, or the drawbacks are that you need to kind of babysit your scripts much more than you would need to if you were using a language like Python or Java to fully automate your strategies. But when we get into the Python script portion of this, you'll see why those drawbacks are worth putting up with in order to use Autoview in your Forex trading. But anyway, if you just wanted to use a fixed position size, you can just set Q to whatever. This is units. Oanda works in units. So if you wanted to trade a mini lot, you'd have to write in 10,000 without the comma. So just 10,000, or if you wanted to trade a full standard lot, you'd need to type in 100,000 units. But the wonderful thing about Oanda, one of my favorite things about this broker, is that you can even trade a single unit if you want to, a single dollar's worth of a position, which most brokers do not allow you to do. And that makes our position sizing, our dynamic position sizing in our scripts much easier when we get around to that. And as I said, we'll cover that in a different video. Moving on, we have T, which sets the order type. So T stands for type, and there are only two order types. We have a market order or a limit order. So if you set market, if you set T equals market on your command, then the trade will be entered at market, which means you'll be paying the spread. And again, another limitation of Autoview is that Autoview does not know where your position was entered, or at least it can't tell your script where your position was entered, because your script can talk to Autoview, but Autoview cannot speak back to your script. So we're working with one-way communication here when it comes to these commands. So if you enter an order using a market order, you enter a trade using a market order, keep in mind that whatever you set your stop loss to, your risk reward profile will be affected by the spread. And that is a big problem on the lower time frames, particularly the 1 minute, 5 minute chart, that sort of thing. 15-minute chart and above isn't too bad depending on the market you're trading and the spread that you get. So major Forex pairs and major markets aren't too badly affected by the spread. But if you are having issues with the spread, then you're going to need to use a limit order. And it's best to use that limit order in conjunction with this command here, which we'll get to in a second, which sets your expiry on that limit order. And we'll go over why that's important in a minute. But next up, we have SL, which stands for stop loss in pips from your entry. So this example command here would, depending on the ATR of this pair, would set your stop loss to 15 pips from your entry. So if you're using a limit order, it would be exactly 15 pips from your limit order price. But if you're using a market order, it will be 15 pips from your entry at market. Next up, we have TP, which stands for take profit. And this is in pips from your entry, exactly the same as your stop loss, but a profit order. So this would be a 4 pip take profit order, depending on the ATR or decimal places of the currency you're trading. Personally, I do not recommend using these commands. I recommend these ones here, which we'll get to in a second, which deal in price instead of pips. This one is a lot more consistent in terms of its execution. Because as I said, if you're using market orders and your fills are being affected by the spread, then dealing with pips as your stop loss and take profit can lead to inconsistencies between your script and actual live trading, which we'll cover in future videos when we start playing with code. The next command is DT, that stands for date/time, and this is your expiry for limit orders. So if you want to set a date, you use DT equals and then a date. So we have the year, we have the month, and then we have the day. So this example would set a limit order with an expiry on the 23rd of April 2021. Or if you prefer, you can use Unix timestamps, which works in seconds, not milliseconds. So for example, let's jump over to a Unix timestamp website. So here we are on a Unix timestamp website. This is the timestamp we are working with when it comes to Unix commands. So if you wanted to set an expiry on your limit order, that was 2 minutes from the current time, you would need to add 120 to this number here. But the good news is PineScript and TradingView provide inbuilt functions and inbuilt variables to deal with timestamps. The catch is they work in milliseconds, so you need to divide everything you do in PineScript's timestamp by 1000 to turn that into seconds, but that's easy to do, and we'll cover that in future lessons. And then finally, the last two important commands we have here on our main Oanda commands is FSL and FTP. This stands for fixed stop loss and fixed take profit, which works in price, not pips. So if you wanted to set a fixed stop loss order on either a limit order or a market order position, you use FSL and then you put in the price, the exact price you want that stop loss order to be executed at, and your FTP is your fixed take profit price. I prefer using these commands when working with strategy scripts and other indicator scripts rather than SL and TP, because as I mentioned earlier, for example, if you enter on this candlestick pattern here and you enter at the closing price, but you use a market order and you were filled a couple of pips higher. If you use an SL, a stop loss order, then let's say your script has a 1 ATR stop loss below this low, but you send it a stop loss in pips, then that will count from your entry price. So for example, if you had a 15 pip stop or a 1 ATR pip stop from your entry and you got hit by a bit of spread, then your stop loss would be a little bit higher since your order was entered a little bit higher, your market order was filled a little bit higher, and that can completely change the profitability of a script because your stop loss is not being placed where your strategy script would ordinarily place it. Whereas if you use an FSL and you did the same thing, you entered at market at the close, but you were filled a little bit higher. Yes, you will skew your risk reward profile a little bit because your stop loss will be a little bit further away from your entry, but at least your stop loss will be in line with how your script was back tested. So keep that in mind. And as I mentioned earlier several times now, we will cover this in actual code when we get to it. I'll show you how to mitigate these problems using things like a time filter so that your script does not execute trades during certain times of day. So for me personally, where I live here in Australia, there are certain times of day in the morning where the spread is horrendous. Around 6 to 8 a.m. my time, the spreads can jump up as high as 10 to 20 times their normal distance. And that can severely negatively affect certain strategy scripts. So I have found ways to mitigate that problem, which I will cover when we get into the scripting portions of this lesson series. But moving on, we have one more slide here, and that is our secondary Oanda commands. So these are commands you won't use quite as often as the others, but they are still important to know. And this pretty much covers all of the Oanda commands. There aren't too many more than this. I don't know of any more than these ones that I've covered. The Autoview website isn't super detailed when it comes to broker-specific commands, but as far as I'm aware, I have covered every single Oanda command in these two slides. But let's get on to the last few commands here, which are these ones here. I'll explain what they do and give some examples. So the first one is C. This stands for cancel or close. So if you write in here C equals order, that will cancel any open limit orders that you have. If you type in C equals position, then that is what you use to close positions at market or using limit orders, etc. So for example, I have a script, my ultimate pullback indicator, which has a bunch of exit reasons. For example, if the script has you trading to the upside, to the long side, and the RSI goes overbought. So here's RSI, let's say the RSI goes overbought, and then you get a bearish engulfing candle, then my script will exit this position at market using C equals position and using T equals market and referencing the symbol that I'm trading, etc. So this is how you close positions or cancel open limit orders. This is also important for things like adjusting your stop loss on an existing position. Once you've opened a position with a stop loss, you can't just update the stop loss with a command. You need to clear it or cancel your existing stop loss order and then send a new command to add a stop loss order to that existing position, which we will go over in these lessons. Next up, we have FGSL, which is a new command that was only recently added to Oanda, and that sets a fixed guaranteed stop loss price. Basically, this is a special stop loss order that protects you against slippage and gaps. So you are guaranteed to be filled at whichever price you put in here. The catch is you pay a premium to have that guaranteed stop loss. This is a recent thing that was added to Oanda literally a few weeks ago, I believe, at least here in Australia. So I haven't used this order type yet, but we will play around with it if we get time. But theoretically, as far as I can tell, this should act exactly the same as a FSL, a fixed stop loss. You just enter a price and it just acts as a normal stop loss, except you pay a premium if it gets filled, because it is protecting you from slippage. Next up, we have TS and FTS. This is your trailing stop, and it works in pips, not points. I don't know why I wrote points there. It works in pips. And I did a bit of testing on this. As far as I can tell, TS and FTS do exactly the same thing. They both just initiate a trailing stop. So one is called a fixed trailing stop price and one's just called a trailing stop price. As far as I can tell, they do exactly the same thing. And basically, if you write in TS equals 0.005 on a order that you open using Autoview. Once your order is filled, let's say you enter short on this candle here, you enter here with a 180R stop loss. If you specify a trailing stop of 5 pips, then as price action goes into your favor, your stop loss will trail below price action by 5 pips. So every time the market goes 5 pips in a profit, your trailing stop moves 5 pips down. I believe that's how it works. We'll do a bunch of testing with this later on in the lesson series. But these two commands are the same thing. TS and FTS is just your trailing stop in pips, not points. Next up, we have RO, which is just reduce only. So if you set this to 1, the only two parameters that are valid for this command is 1 and 0. By default, it's set to 0. If you set it to 1, that means any command, any market order or limit order command you send to Autoview can only reduce open positions. It cannot open new positions. So for example, let's say you have 10 contracts going short, and then you send a command to Autoview to add 5 contracts to your short position with RO set to 1. That command will not be executed by Oanda because it is not reducing your position, it is adding to your position. So if you set RO to 1, and let's say you're 10 contracts short, you set RO to 1, you send a market order to buy 5 contracts, then this order will be executed and you will now only have 5 contracts open on that market. Then let's say you send another command to buy 10 contracts. This command will not be executed because you have only 5 units open or contracts open, and you've set your order to reduce only. So rather than selling 5 contracts and then going short 5 contracts, it just won't be executed because you've set RO to 1 or enabled. Next up, we have D. This disables execution of any commands. This is for debug purposes. Basically, if you set D to 1, it's set to 0 by default. But if you set it to 1, then any command you send to Autoview will not be executed, but it will show up in the log section of your Autoview plugin, which is this thing here, the log on your Autoview plugin settings menu. If you set D equals 1, then the logbook thing here will write out what that order would have done if it had been executed, but it won't actually execute the command. So this is good for practicing playing around with real money orders. If you're dealing with a demo account, it really doesn't matter if you screw something up. But if you are dealing with real money, or you're trying to debug something out of your script, use D equals 1 to disable live execution of your alert commands. And then the final 2 commands we have here is delay. This just sets a delay on your command by X amount of seconds. So if you, for example, you set delay to 30, that means your command will not be executed for 30 seconds after being received. So I'm not really sure of any use cases for this unless you're sending a bunch of commands to Autoview all at once and you want to space them out a little bit. But for the most part, I don't think many of you will